Good morning, this is Wayne Blau with another smart profit maximizing moment. And as I picked up my iPad, I shut down the article I was going to use. I got it back. Anyways, I said I wasn't going to do anything more on PPPs and payroll protection programs and the anything else to do with the EIDL and all that garbage, unless something changed. And it looks like we have some pretty big changes that are about to become law. Yesterday, the Senate passed the unanimously passed the what's it called, the Paycheck Protection Flexibility Act, and sent it to Trump for his signature, and who's expected to sign it. It passed 417 to 1 in Congress and unanimously, well, with about 10 people there, whatever the new rules are nowadays in the Senate and the House. Yeah, anyways, it passed in Senate unanimously, and Trump will sign it. So I'm breaking my own rules because I usually don't talk about any bill until it's actually a bill. But this one looks like it's, I'd be amazed if Trump didn't sign it because it makes some serious changes. Let's talk about the high points, okay? Current PPP borrowers, all right, ones that already have a payroll protection program loan from the SBA, from a bank, approved through the SBA, can choose to extend the 8-week period to 24 weeks. So that's important because you might not have been open. This kind of makes it easy, makes me have to change my mind and go back and look at some of the people I didn't get the loan for because they weren't able to open. All right, so there's maybe we're going to put in an application for them. But the covered period has to end by December 31st, 2020. So, I mean, if your 24 weeks goes past 2020, tough luck. You got 17 weeks or whatever it happens to be. The flexibility is designed to make it easier for more borrowers to reach full or almost full forgiveness. That was the design. And that's really good because I have some that got pretty good sized loans. They have a lot of payroll, but they may not have a job that's going to eat up all that payroll right now. Now by going to 8 weeks to 24 weeks, and you can elect that, all right? So that's up to the borrower to make that decision. How that's going to be done, nobody knows yet. I'm assuming the SBA will put out, the new forgiveness application that'll have that as a checkbox. I elect the 24-week covered period instead. On the bottom side, under the language of the House bill, which is what passed, payroll expenditure requirements dropped to 60% from 75%. So only 60% of the 60% of the loan needs to be approved, needs to be for payroll. And that's kind of important because if I have a smaller business, payroll may not, the rent may be a lot higher to keep them open. Utilities, they may be the only person there or them and their spouse. So kind of they're reducing that a little bit, but there's a downside to this. It's got a cliff. If you don't use it for 60% for payroll, none of it's forgiven. Now I'm curious to see, the Representative Chip Roy from Texas in this article, who co-sponsored the bill in the House, said in a House speech that the bill intended the sliding scale to remain in effect at 60%. So there may be a technical correction later, a technical tweak to restore the sliding scale. Who knows? For now, it's the law, or it will be as soon as Trump signs it. So, assume you have a 60% cliff. Now, question, what's that do to self-employed people? Is that 60%? What is that? We're going to have to read that and get into it. Borrowers can use the 24-week period to restore their workforce levels and wages to the pre-pandemic levels required for full forgiveness. This must be done by December 31st, a change from the previous deadline of June 30th. Before, one of the two things that could knock you down from forgiveness amount was not having the same level of employees was one, and then having your full-time equivalent wages be lower as a second. This allows you to actually take you have till the end of the year to get back to where you were to get full forgiveness in that particular first one. Not sure how we're going to do full-time equivalents and what period we're looking at, so that's an excellent question. The legislature also threw in two new exceptions allowing borrowers to achieve full PPP loan forgiveness even if they do not fully restore their workplace. Previously, to give you an idea, you probably heard this previously, Previous guidance already allowed borrowers to exclude from those calculations employees who turned down good faith offers to be rehired at the same hours and wages as before the pandemic. The new bill allows borrowers to just because they could not find qualified employees or were unable to restore business operations to February 15, 2020 levels due to COVID-19 related operating restrictions. Wow. That's kind of important because we had a problem here. I'm not allowed to open. I don't need people if I can't open, so that means I wouldn't get it done. Another kind of important thing here, new borrowers may have 5 years to repay the loan instead of 2, all right? Existing PPP loans can be extended by 5 years if both the lender and the borrower agree. All right, that's kind of going to be interesting. You're going to have to go to the borrower and state your case if you need to go from 2 to 5 years. And you're going to need to have financials. You're going to need to show, yeah, you were able to open, but the economy hasn't recovered. We're not going to be able to pay this back in 2 years without really seriously threatening the existence of the business. 5 years would lower it. The 1% interest rate remains. It's reasonable. I think you should first aim for total forgiveness, but the amount that's not forgiven, if you can't do it in the 18 months, because here's what basically happens. It says 2 years, but the first 6 months, nothing. There's no payment due. The payment starts at month 7, so you really got 18 months to pay back whatever isn't forgiven. This gives you basically 4.5 years to pay back what isn't forgiven. All right. The bill also allows businesses that took a PPP loan to also delay payment of their payroll taxes, which was originally prohibited under the CARES Act. That's a different provision, but we have the ability. I'm not going to get into it. I'll just get it because I've covered this before. You basically can make an election to do your payroll taxes at different times, the end of this year, half this year, half next year. It depends on what you are, okay? Those are the major changes. So, we're going to have to wait for the SBA to put out the form. I think overall it's good. I don't think that 60% cliff should be a big problem. You shouldn't have gotten a loan if you weren't planning on putting people back, to be honest about it. But even that looks like they're going to sliding scale that. So who knows? There are more changes coming. And then don't forget, just because this bill passed doesn't mean that we won't see more changes. Okay. One of the things that's not in this bill, though, I expected and I thought would be in this bill, was I thought Congress would correct the IRS, because Congress originally said it was not their intention to give a company $20,000 and then take $5,000 back at the end of the year by making it taxable. IRS came back and said, right, the law says it's not taxable, but we're not going to let you deduct anything, that you pay with the $20,000, which basically is the same thing as making it taxable. And it was not their intent. I thought I'd see it in here. I still think there's a chance we'll see it. That's probably not going to be as clean now. This is probably what they could pass quickly with unanimous support. So we're going to have to wait and see. Until next time, this is Wayne Bilal saying, let's make this our most profitable year ever, and let's work on getting those loans forgiven.